A lot of advice you're getting from Dubai real estate agents is wrong. We've just finished analyzing over 800,000 Dubai real estate transactions, and you might be surprised at what we discovered. Today I'll share what developers generate the highest and the lowest returns, which areas you'd better avoid, and what mistakes cost Dubai real estate investors hundreds of thousands of dollars every single year. Starting with the best and the worst performing areas. And let me show you the ranking right away. This is the list of all major areas of Dubai and their average annual growth since 2020 until the end of 2025. So you can see that this average annual growth rate for the top one area is 17.8%. This data is for apartments. So it means that in the top one area, an average apartment appreciated in value by 17.8% on average every single year. I'll show you the area's names soon, but before I do that, a couple of things I want to pay attention to. First, do you see how broad the range is? Mistake of choosing the wrong area is actually pretty expensive. The difference between the best and the worst is multiple times. And this is the annual growth. Over the course of 5 years, the distance between the winners and losers is huge. Point number 2. Take a look at the bottom of the list. You can see there are areas that appreciated by 1, 2, 3 or 4% year over year. I bet you haven't seen many areas like that. You haven't heard about them from real estate agents. You probably haven't even seen them when you did your own analysis. And the reason is that it's really easy to make several critical mistakes when it comes to analyzing the area's growth. You should never mix ready and off-plan. You should analyze them separately. With off-plan, developers can just push the prices up. They can launch new phases at a higher price. Ready properties are not like that. Their price is determined by the market, so it's a more objective metric illustrating the true area's growth. But even with ready properties, there are many traps. For example, let's say there is a new building that is completed in the area. It has a lot of units, and the average price per square foot is 3 times higher than the area's average. So this pushes the average ready prices in the area up. But if you own another property, an older property, then this doesn't help. Your property doesn't become 2 or 3 times more expensive just because now your area has a new expensive building. So the numbers you see right now, they're calculated differently. We took the true growth of each project around Dubai. We analyzed 260,000 ready apartment transactions, and now we can show you the names of different areas and their price growth. Here's the list. The average growth since the beginning of 2020 till the end of 2025 was 8.5% per year. So all the green areas, they appreciated in value faster than average. All the yellow areas are below the average value growth. Before you jump to any conclusions, I want to warn you. The historical performance isn't always the best predictor of the future performance. So guessing the next best area based just on this list is not the best idea. There should be a more complicated analysis. And actually, the next fastest growing area is not even here. It's an early stage area. So we didn't make the list based on the prices of the ready properties. But there are 3 more important insights you can get from this analysis. First, take a look at Shoba Heartland. An average apartment value appreciation was just 3.5%. So for investing, this area was far from the best. But for living, this area is great. And this is one of the most vivid examples that home buying and investing should have completely different decision-making frameworks. The second point is that most affordable areas, they're in the segment that grows slower than average. International City, Sports City, Arjan, Production City, Studio City, they are not the best for value appreciation. But the rental yields are pretty good there. And the final point, look at the top performers. All of them have some unique element, something that makes them stand out, but something that's really hard to replicate. DIFC, apartments there are surrounded by offices with companies from the financial industry, banks, hedge funds, some of the richest corporations of the region. Dubai Hills Estate, very centrally located in between everything. An area with a huge mall, a huge park, hospitals and schools, perfect residential infrastructure. Palm Jumeirah, an iconic area with properties at the beachfront. Al Barari, arguably the greenest area in the UAE. And Blue Waters, 50 restaurants, very low supply of residential units, strong location near Dubai Marina GBR and the Palm, an iconic landmark. There is the world's largest Ferris wheel on Blue Waters, and amazing sea views. So all these areas, they're one of a kind. Now let me show you the same ranking but for villas. Here's the list of all the main villa communities in Dubai. They're sorted from the fastest growing to the slowest growing. The green ones are those that are growing faster than the market average, and the yellow ones are growing slower than the market average. So an average house showed a 15.6% average value growth every single year. It's twice the average growth of apartments. And it tells you something, right? Great villas are indeed amazing investments. But it also tells something to developers too. They know that investors are aware of the outperformance that villas have shown, so they use it in their own favor. And some of them are launching villas and townhouse communities that are not that good. The quality can be lower. The layouts are not that smart. Small kitchens, small living space, small bedrooms, no infrastructure, poor amenities. So for target users, for families, those villas won't be good, so they won't be appreciating in value as fast as investors expect. And let's look at the top 5. Jumeirah Bay Island, that's Bulgaria Island, Jumeirah Islands, Emirates Hills, Nad Al Shiba, and Palm Jumeirah. So 4 out of top 5 villa areas are prime areas. They have some of the most expensive, some of the most luxurious villas in Dubai. And this is the #1 indication for the wealth migration trend. Dubai is the world's #1 city for millionaires and billionaires to relocate. That's why luxurious properties appreciated in value that much. And this trend is accelerating. More and more high-net-worth individuals move here. So we think that luxurious properties, luxurious villas, will keep appreciating in value faster than anything else. By the way, after we finished our analysis, after we went through 800,000 Dubai real estate transactions, we decided to create a tool. We initially wanted to keep it for internal usage, for our advisors and brokers to use it during the private consultations. But eventually we decided to share it with our subscribers. We call it a growth tracker. And with this tool, you can choose any area and see its real historic performance. You can also choose any developer and see the same, what was their historic growth. And you can also see how their properties appreciate in value during construction. So by using this tool, you should get a much better idea of how similar investments performed in the past. And if the developers you're gonna invest in actually going to deliver what they promised in terms of returns. So the growth tracker is free, and if you want to get it, you need to just scan the QR code or click the link below the video, and someone from my team will send it to you. Now let's get to the most interesting part and discuss developers. And we'll break down the analysis into 2 parts. The first one for ready properties performance and the second one for planned performance, the appreciation during construction, because the insights there are pretty different. So again, we took the real properties growth since the beginning of 2020 till the end of 2025. And let's start with the ready properties. Here's the list of all the main Dubai's developers and their performance in this period of time, the performance of their completed projects. We only took those who have a substantial number of completed projects. Otherwise, results could be statistically insignificant. So the champions are Iman, Dubai South, Emaar, Nakheel, and Azizi. Surprised? We'll get back to it in a minute. But even by looking at this ranking now, you might notice the same thing you already saw with the areas. The top performers and the underperformers, there is a huge gap between them. And again, it illustrates that choosing the right developer is critical. Iman is the top one on the list. Their properties, their ready properties, grew in value by 17.5% on average every year. And this is an indication how overlooked this developer was. The reason why they were growing so much faster than most of the others is that they were undervalued by the market. For quite some time, Iman remained a hidden gem. Even when their projects got completed, the market hadn't realized how valuable they are. And yeah, obviously they caught up later. And now Iman is great, but it's not a hidden gem anymore. Too many people know about them. So in 5 years, most likely we'll have a different name on top of the list. Someone most people and agents don't know about yet. What I just showed you is for ready properties. Now let's take a look at Avplan. We went through all the Dubai real estate projects that were launched and delivered between the start of 2020 and the end of 2025. And we left only those developers who had substantial number of launches. And we got some interesting results that can be pretty misleading at the same time. Let me show you and explain what I mean. So here's the list. Developers, number of completed projects or phases of the projects, and the average growth of their properties over the construction period. The average was 18.6%. So all the green developers are those whose projects were growing in value faster than the market, and the yellow ones were below the market average. The champions are Omniad, Miraas, Dubai Holding, MAG, Iman, Select Group, Imtiaz, Ellington, and Emaar. So if you invested in one of them, you got pretty good growth during construction. But can you spot a flaw in this analysis? What do we miss? I'll give you 3 seconds to think. 3, 2, 1. We miss how long these properties were under construction. Because 10% value appreciation in 1 year is much better than 20% value appreciation in 4 years. So here are the construction timelines for all these developers. And you can see that Omniad, for example, despite delivering very high value growth over the construction period, took much more time to get their buildings ready compared to Imtiaz or Iman. So the next thing we do, we calculate the average annual growth, and we add one more column to the table. And the picture now is a bit different. An average value growth, annual value growth during construction in Dubai since the beginning of 2020 till the end of 2025 was 6.8%. So all the green ones grew faster, all the yellow ones grew slower than that. So the list of those who outperformed the market average includes Iman, Imtiaz, Omniad, Miraas, Dubai Holding, Bingadi, Ellington, MAG, and Select Group. A short disclaimer for finance nerds. This doesn't take into account that all these developers, they have different payment plans. So the growth we're assessing here is not a 100% true IRR, but it's a good enough indication for what we're doing with this video. Now if we take a look at the bottom of the list, there are some names there that some viewers are not really surprised about, and some of them, as we've already seen, showed a pretty good value appreciation after the handover. So they're ready properties, they're growing nicely, but their planned properties, they're performing below the average. And there is no one single factor why it happens. It's a combination of several factors, like construction timelines, of planned pricing, matching the buyer's expectations about the end product, releasing too many units simultaneously, and having too much investors in the buyer pool, meaning the share of end users who buy at the off-plan stage is very low. So when the units are delivered, a very large portion of them goes to the market instantly. But when the project is handed over, now the real buyers, the real users determine the price. Correction happens, and if you buy the property after the correction, then there is a chance, if the base is low, that this property will appreciate in value faster than the market average. These were apartments. Now let's quickly take a look at villas. Here is an average annual growth for different villas and townhouses developers. The table on the top shows the off-plan growth during construction. The table at the bottom shows the ready properties growth after the property is delivered. I wouldn't worry too much about those developers whose houses are growing slower than the market during construction, because they're really big. They're building a lot of houses, and it's really hard to outperform the market if you are the market. And now it's time to discuss another very hot topic, ready versus off-plan. And before we make a deep dive into that, I wanted to tell you that if you like our approach, you can get a free consultation with us. We're very different from other UAE brokerages. The analysis you'll be getting is prepared by former management consultants, investment bankers, and real estate experts with decades of experience. So you'll be getting advice based on real numbers, data, and real-life experience. And we're focused on investors. Our business thrives when our clients make money. So we won't allow you to be fooled by developer sales reps, and we will save you from costly mistakes. And after you make an investment, we stay close. We'll guide you through the whole investment process. We'll support you during the construction. We'll help you with the visa application. And when you decide to resell or rent out your property, we'll handle this side of things for you too. So if you're looking for a support like that, you can drop us a message directly. There is a WhatsApp link in the description. And you can leave an application through our website. There is a QR code here and the link to our website in the description too. And now let's finally address the ready versus off-plan argument. And I want to start with a very controversial topic, pricing. How many times have you heard that off-plan prices have become too high compared to ready properties? We're screwed. The market is over. Off-plan investors gonna lose a lot of money. Let me show you something. This chart shows the ready and off-plan prices for apartments in Dubai. These are the average numbers since 2017 until 2025. And I think you've already noticed something. The blue line is off-plan, the red line is ready, and the blue line have been above the red line all that time. 6 or 7 years ago, the difference was around 30%. Off-plan was 30% more expensive than ready properties on average. In 2025, the difference reduced, and now it's around 20%. Off-plan properties are still more expensive than ready properties, but the rate is lower. Does it though mean that buying an off-plan property that is priced higher than a ready alternative is a great investment? No, of course not. What this chart really means is that the situation that we have now is pretty much the same situation that we had during the period of rapid market growth, when many off-plan investors made big returns. So with apartments, the core approach to investing doesn't change. You should keep looking for value gap properties, something that is priced at the off-plan stage lower compared to ready alternatives. With the villas, by the way, the case is a bit different. Ready properties are priced higher than off-plan properties, and now this difference is higher compared to what we had several years ago. A couple of important points here. First, this difference is partly driven by the fact that many developers are launching more affordable, more simple types of houses. They're not that convenient, they're smaller, so they're priced lower. Point number 2 is that with villas, still there are many options when you can buy a house that is priced much lower compared to the ready house like that. Many of villa buyers, roughly 2/3 of villa buyers, are end users. So they're buying for personal use. They're gonna live in these villas. So if the new off-plan villa isn't significantly better than the ready one, or isn't significantly cheaper than the ready one, then they won't buy. This is why we have what we have now, and this creates a good opportunity for many investors. So by this point we've discussed different areas, different developers, ready versus off-plan, villas and apartments. But have you ever wondered what type of apartments should you go for? Studios, 1 beds, 2 beds, 3 beds, etc. This chart shows the supply of different unit types by year. I know it's hard to comprehend, so let's simplify it and leave just 3 years: 2015, 2025, and 2030. 2030 is a projection based on actual off-plan sales. So the share of studios is going up. It was around 17% 10 years ago, now it's 19.5%, and it's gonna be more than 21% in a 5-year period. 1 beds are roughly the same, 2 beds share is declining, 3 beds share is declining, 4 beds also slightly declining, and 5 beds, they're declining and there are almost none of them. So intuitively, some wanna say that studios and 1 beds, they're oversupplied. There are too many of them, and now more families are moving to Dubai. Given that the share of 2 beds is declining, share of 3 beds is declining, these are the best types of units. But let's see if investors who understood that beforehand managed to make good money out of this knowledge. Let's add one more row with an average annual growth for each of those unit types. And actually studios were growing slightly faster than other units, and there was no difference between 1 beds and 2 beds. You can see the real difference if you compare any of those with apartments with 5 beds or with more than 5 beds. These are penthouses, and penthouses are growing 2 times faster than other smaller units. So if you have a budget for a penthouse, go for a penthouse. But if you don't, your decision what to go for should be based on the area supply, on your target user, target buyer or target renter. So there is no definitive answer how many bedrooms do you need. It differs case by case. And the next thing I want to tell you about is a framework that we developed to help investors think about different Dubai areas and different Dubai developers. It's a 7-level system, and we made 2 separate videos about them. 7 levels of Dubai developers and 7 levels of Dubai areas. Worst to best investments.